really exciting time to be in India right now. But remember, it's not easy. We've had a year where there has been a drawdown in the markets. The markets have gone down, but the investors have stayed.
From the lens of a retail investor, why does that really make a difference?
That is the biggest decision to make, to be honest.
What are the sectors that excite you the most for maybe the next 5 years?
If you had asked me this question a year ago, I would have probably answered, I don't know actually.
Can you talk about your net worth today and tell us what it is?
So I'm going to disappoint you here right now. This time we have Aladdin.
And if you go on the internet, there's tons of videos about it. And some of them are really scary to look at because they paint it as a very secret weapon that somehow gives BlackRock an edge above others.
I think tools like are amazingly powerful.
Hello and welcome to another episode of the Net Worth Show. My name is Shagun and today we have with us Mr. Sid Swaminathan, who's the MD and CEO of JioBlackRock Asset Management Company. Today we'll be speaking about the stock market, Sid's personal wealth creation journey, about the JioBlackRock joint venture and what it means for you. If you find this interesting, stay tuned till the end. Hi Sid, how are you?
I'm great, thank you for having me.
I am really delighted. I'm very nervous, like I was telling you off camera. But there's a lot I want to talk to you about. I want to talk about you, your journey, about the markets, and of course this venture. So we'll start with that first. BlackRock was in India back in 2018 and it exited. What's different now and why Jio? So a lot of questions about what's made it come back.
A couple of things. So I'll answer your second question first, if that's okay. So, you know, why are we here, right? And I think if we look at a few, let's say, combination of factors about where India is, what the economy is up to, it's really, really exciting time to be in India right now. So the macro factors, you know, the way the GDP is growing, how productivity is increasing, the demographics that are at play here are unique in terms of anywhere in the world.
True.
And then if you look, let's say, one level below and actually double click on some of the micro factors, where we are seeing a lot of let's say, the participation of individuals into the financial markets increasing at a pretty rapid pace, but still at a fairly low level compared to other parts of the world. So that combination of the two is extremely, extremely encouraging when we look at it in terms of how we see the growth from here on. And that's why we're here with the joint venture. What's different this time? You kind of hinted part of it already, which is the partner. So it's with Jio. And I think that's a very kind of unique proposition where on one hand, you have the world's largest asset manager with all of the global investment expertise, operating in markets around the world for many, many years, coming to India and partnering with an institution that really understands the retail customer. And again, predominantly retail market in terms of investments here in the mutual fund space. And then also really in with a digital reach that is unique in a way, right? And the ability to harness that kind of, let's say, investment power and being able to deliver that in a way to customers that is differentiated, on their phones, is something that's very exciting, and that's very, very different for this joint venture. Another point I would make, more specific to the investments itself, is the platform. So this time we have Aladdin, which is BlackRock's global investment platform, used around the world, in India, and that's something that I truly believe allows us to innovate and scale at the same time. So the ability to come up with differentiated products and then scale them up is something that is very unique. So these, I would say, are probably the two let's say, big differentiators.
So I already have a lot of follow-up questions in my head.
Sure.
But one thing that really stuck out to me was when you said that, we have Jio and we have BlackRock, and they're both powerhouses. And I just want to understand, from the lens of a retail investor, why does that really make a difference? Why should I care that these two giant powerhouses are coming together? What's in it for the retail investor here?
It's a very good question, right? Firstly, I think the ability of the two names, right? So the two names carry, let's say, a level of trust with them already. So that's super useful, because when you're thinking about investments, you're parting with your money into funds, so you need to be able to trust where that money is going. So now there's a little bit that comes with the name already, but a lot of it has to actually be earned, right?
Yeah.
So you can't just buy trust; you need to earn it.
True.
So I think that gives us a starting point into, let's say, people's thinking. But then more importantly, when we convey, what the value proposition is of the offering, right? And we need to do a lot of hard work on doing that, making sure it's clear, concise, understandable. And over time, the combination of that, the understanding and the trust come together.
Yeah.
And I think in this day and age in India, especially if you can crack that with, let's say, the power of the phone, and we can talk a little bit about, the trends that are happening in the digital space in finance here.
Yeah.
I think that's a extremely, extremely powerful phenomenon, and that's I think what I think we are really trying to bring to the audience here.
Yeah. So one thing that you've mentioned over and over again is how you guys want to offer a differentiated product. So again, then what are the differentiators? What's so unique about all the products that you guys are launching now?
Sure. So far we've launched 8 funds already, and we're in the process of launching our 9th right now.
Yeah.
And if we just look at the types of funds that we've launched, it's really funds that are catering to segments of the Indian population, right? So we started with cash funds, and these funds are predominantly used by institutions for their liquidity purposes. We were very happy to see that there was also good retail participation in those funds, so that was really good to see. Because it talks a little bit more about the financialization of savings, so that's a really good kind of proof point to see that there. But when we look at those, we really did a deep analysis of, hey, what do the investors in that segment value the most, right? And for that segment is really about safety, liquidity, and return. So we designed our investment process to, provide that to the customer in terms of, the kind of analysis that we do on the securities that we hold. The ability to transparently show that to those customers in terms of here's what your portfolio is actually holding and here's how it behaves in different scenarios. That's really important for that kind of segment.
Right, sure.
So that's how we address that segment. And then the next set of funds were 5 index funds. So these are funds that just track benchmarks. And we truly believe that having a core set of building blocks in terms of funds is a really powerful tool for people to build what I call whole portfolios. And by whole portfolios, I mean, it can be different for every individual, but it's really something that is delivering for every individual a unique outcome based on where they are in life, what their goals are, etc. So, but you need building blocks to deliver that. So these were the building blocks that we provided. And again, the value proposition there is that all of the building blocks were there together at one time. And then the quality with which those building blocks, so when you launch index funds, the goal of those index funds is to track the index as closely as possible. So, and BlackRock has been doing this for many, many years, is very large in this space. And best practices that we brought here is that level of, let's say, specificity with which we look at how best we can track the index. How do we trade the fund so that the difference between the benchmark index return as well as the fund return are as small as possible, right? And that's really the big focus for us. And then the entire package of delivering that in a very cost-efficient manner is very important, because these are basic building blocks, so they need to be cost-efficient. And the fact that, again, the platform that we have, which is Aladdin, enables us to produce these kind of funds at scale with a lot of efficiency. We can then pass on some of those efficiencies to the end customers. That was the thinking around the index funds. And now the fund that we are in the NFO phase right now is our first active equity fund. And here again, like this is primarily an active equity market. That's let's say the biggest segment here, as well as a lot of focus from the investors also goes into that. So when we study the market, we really looked at, okay, what's the landscape like? Who are the players? What are the kinds of strategies that are already in place? I told you before, we're expecting this market to grow significantly from here on. But for the size that it is right now, there are a lot of players. There's 50 asset managers here already. So we wanted to make sure that when we come to market with something that's truly differentiated. And we looked, and the benefit that we have is that at BlackRock, there's many, many different strategies that are available. So we looked at what we call the systematic active equity strategy. And that's what we're bringing to market here with our FlexiCap fund. And it really takes a very differentiated approach to active equity. So it's very much data, technology driven, with a lot of human interaction to make sure that the portfolios are positioned and behaving the way they need to be. But what that results is in portfolios that look, feel, and behave very differently to what's available in the market. So, and that's kind of the thinking so far. And going forward, that's exactly how we're going to be approaching our future fund launches, product launches, is that how can we address the customer, the needs of the customer, but in a way that is not being, let's say, addressed by the other players and the funds that are already here. So that's the thinking that we want to apply. And I think with the experience that we've had at BlackRock, we believe there's a lot more scope for innovation going forward.
So you actually can't talk about BlackRock and not mention Aladdin. And if you go on the internet, there's tons of videos about it. And some of them are really scary to look at because they paint it as a very secret weapon that somehow gives BlackRock an edge above others. So for our audience that does not know about this, can you simplify what Aladdin is? And what's the advantage that it's giving you that your competitors don't have right now?
Okay, sure. I will happily do that. So I have been, prior to this role, I've been at BlackRock for nearly 20 years and used Aladdin for probably 17 years. So hopefully I can do a good job of simplifying it and explaining it to you. Look, the secret weapon, if you want to call it that, is the fact that it's an integrated platform that covers everything from an end-to-end perspective that you would want to do as an asset manager. So if you think about the functions that an asset manager would do, whether it is operations, risk, fund management, dealing, compliance, all of that is incorporated into one system. All of the data that is being used is all encapsulated inside that. The analytics, every team that is interacting with, let's say, the system or the portfolios is looking at the same set of data, and it's very consistent, right? So internally, we actually refer to Aladdin as the language of portfolios. So if everyone speaks the same language, things become much more transparent and clear. So that's like the core of it, is the fact that everything is in one place. And then there's a lot of, let's say, analytics and tools which allow you to innovate, right? And to be able to do that with the, let's say, the knowledge that it can still be done in a safe and closed manner is super powerful for an investment specialist. And then that allows to innovate, that allows you to scale. So that's, let's say, from a, I would say, manufacturer's perspective, where the real benefit comes into play. And then over time, you also start seeing how investors and clients can benefit from it. So I gave you an example already of institutional investors. So there's more, let's say, transparent reporting that can be provided through the technology to those institutional investors. There are, scenario analysis that can be run and provided to them because they care a lot about that. Similarly for retail, you probably don't want to overwhelm retail with too much of information, but there are more simpler, let's say, analytics that can be provided through time, and those can be increased as, let's say, the awareness and the interest increases as well. So that's how we see it. And look, I think the fact that it is well established, has worked really well globally, in many, many markets, gives us the confidence to be able to, bring that to India, and that it'll be successful here as well.
So this is actually a real weird question. I was just, while you were answering, I was thinking of it. Now, Aladdin is a very complicated, kind of tool or platform, whatever, that you guys have. But what if I wanted to create an Aladdin at home? In the sense that it's clearly a way that you get a very holistic view of what's going on in the portfolios, and it's basically a great data infrastructure. Now, I, a person who does not understand coding, who does not have all of these resources, if I was to actually use the kind of how do I say, the processes that Aladdin uses to analyze companies, what are the things that I should be looking at? Because I'm asking you this because I actually want this podcast to benefit just the very simple, basic investors.
Yeah.
And if I don't have access to a platform like that, then what do I do? How do I improve my research when it comes to my portfolio?
Yeah, look, that's a very interesting question. Firstly, like it also depends on the individual interest, right? Now, if you're saying in your case you want to, analyze the companies, there are many tools out there. I'm not going to name any of them specifically, but I think you want to do some research firstly, get some understanding on what are the different tool sets that could be used to get the kind of analysis that you want. But remember, it's not easy. Right?
Yeah.
This is hard work. That's why a lot of them do it professionally. But people still can do it, and people have a lot of interest in doing that. And others who, let's say, might not have as much interest might say, hey, you know what? Actually, I want to do away with making that kind of stock-specific decision myself. And I'd rather let the professional do it. And that's why they would go to a mutual fund or a fund manager. Some people might say, you know what? I don't even know which one to go to. I want to get some advice. They might want to go see an advisor. So there are many tools out there. Obviously, with the work that the industry is doing in terms of increasing education, I think it's really exciting because a lot of people can go on YouTube, watch videos, learn, try things out, and there are tools to do all of that. But then you also have the option of saying, okay, I just go invest in a fund where all that is taken care of, or I go and get advice. So I think there's many ways to cut that.
Understood. So while we're speaking about the country, of course, the macro signs look great. We know that we're heading in the right direction. But then, of course, when you look at the news, there's a lot of stuff going on, and foreign institutions leaving the country is a big theme right now. What's your thought on that? Why are they leaving the country if there is so much scope, and if the Indian growth story is really as strong as we are talking about it? Then why are these institutions leaving the country?
Yeah, sure. Look, I think depending on where you are, you're always going to have a different lens on how you think about your asset allocation. I'm going to keep going back to this asset allocation whole portfolio because that's really important. Right? So, and remember, when you've got, let's say, a global hat, you're looking at a particular country, but you're also looking at it relative to everyone else, right?
Very true.
So there will be pockets of time where you would say, hey, you know what, for the next 3 months, 6 months, I might want to get out of here and put my money over there. So you can see some of these allocations come through. So that's, a lot of the big institutional international players might be doing that from a more, let's say, tactical standpoint, right? But the flip side of that, especially, which is really encouraging in India, is the domestic demand. Right, so you have seen, as you said correctly, the international investors pull out over the last year, but that's been, let's say, compensated by the domestic demand, which again is strong, still at a, let's say, lower base and increasing. So that's huge. And then you combine that, let's say, balancing force with the more bigger macro picture, which now you're thinking 3 years, 5 years down the line is still very bullish. I think that's the kind of view that anyone that's sat here in India should be taking more of. Because the international flow is exactly that. It's flow. It's going to come in, it's going to go out, it's going to be more tactical at times. But the domestic demand is super encouraging.
So, we were talking about how almost everybody has a mobile phone now, and people are really, the financialization of savings, as we were speaking about it. But, I'm concerned about that instead of being really excited, because I feel like most Indians don't really understand the complications of the market. So do you not think that this is actually a pretty dangerous trend where we are seeing people enter the markets, even though they don't really understand what's going on? And at some point of time, I feel like it's actually going to, not be as lucrative for you as it seems right now, because then these people are going to leave the market as well. So then what do you do there? Is there more that needs to be done to educate the investors more, and where do we go from here?
Your last point is absolutely spot on. So education is the most important. And as I said before, I think the industry is doing a very good job of providing the education, increasing awareness. We are very keen to contribute to that as well. we are fairly confident that we can bring our own angle to that because of the global, let's say, background of BlackRock. We can provide a slightly different lens to that education as well.
Yeah.
That is super critical. And then I link it back to my earlier point is combined with that education, you build the trust, right?
Yeah,
So
very true.
education and trust are two core principles that we need to abide by. In terms of the experience that people might have, and people have had that, right? We've had a year where there has been a drawdown in the market, so markets
Yeah.
have gone down, but the investors have stayed, broadly speaking, right?
Yeah.
So I think that's a really positive sign of the market actually reaching some level of maturity, which means that investors understand markets can go up and down.
Yeah.
If I'm here for a longer term view and I have a strong long term view, I stay in. I think the tools like SIPs are amazingly powerful in terms of putting it into the muscle memory of people of saying, hey, if I consistently invest, over the long run, I'm averaging out all of these ups and downs.
Yeah.
And in the long term, that's going to be ultimately positive. So I think that is really encouraging to see, because you're right. I think if you had asked me this question a year ago, I would have probably answered, I don't know, actually, because majority of the population has started investing and they've only seen bull markets. They've only seen it go up.
Very true.
But now we've actually had a year where it's gone down, come back up, stayed overall flat.
Yeah.
And to see that the domestic demand is still strong, people are still staying invested, that's a very positive sign of the market maturing.
Yeah. The one question that almost every time our audience waits for is your opinion or the guest's opinion on the sectors of the market. What are the sectors that excite you the most for maybe the next 5 years? And, are we going to be seeing some activity when it comes to sectoral funds coming from JioBlackRock?
So I'm going to disappoint you here right now.
Oh, no.
Because I'm not going to give you a single sector view, right? I'm going to leave that to my CIO, who's probably better placed. But I will give you something. I think the way I like to think about it is more like the macro trends. Like that's kind of what I really look at.
Okay.
And I've talked about it a little bit already. So the digital piece is extremely encouraging
Very
here,
true.
right? So that how, and especially for finance, right? So the technology stack that has been built around financial services here is very impressive. I think better than most countries in the world. And the fact that individuals are getting more and more comfortable using that financial stack through their phones is super encouraging. And when you think about financial inclusion, how do you get financial inclusion? Well, you get it into people's phones, and then they can just use it and participate in the market. So that mega trend, macro trend, whatever you want to call it, is something that I feel is a huge driver of the growth story here in India. Also, demographics I've already talked about. Like that's a huge boon in terms of where we are, the size of the the working population, the productivity that we're still seeing come through that. That's amazing, and that's going to be enhanced definitely, I think, with AI and how people adapt to AI. That's really important. And then, more getting towards where India is evolving in kind of the overall global world order, actually emerging as a manufacturing alternative as well. And I think that is also very exciting.
Yeah, very.
Right? So rather than just call out specific sectors, these three big mega trends are something that I find very exciting and that I track very closely.
Understood. So, you guys have, like you said, you're working on the 9th launch right now, and that's just your AMC. Now there are tons of others, and I was wondering, there are so many NFOs coming out every other day and every other month. For an investor, this must be a really overwhelming process. I just want to understand, how do you decide, and how should an investor actually look at different funds and figure out what's going to be the perfect fit for them? So how do you analyze funds?
Yeah. 49 other AMCs. The number is 50 right now. So you're absolutely right. And it's both an art and a science, right? So I think firstly, for an individual, it's really important to know, what are their goals, right? What are they actually looking to achieve in the short, medium, and long term?
Yeah.
And then combine that with where they are, what kind of income they're expecting, etc. To then think about, okay, what should my ideal? I'll go back to that word, asset allocation.
Yeah.
What should that be?
Yeah.
Right. So I think that is the biggest decision to make, to be
Yeah,
honest,
very
right?
true.
Beyond anything else, beyond which stock or which fund, like that is the core.
Yeah.
Now, people can make it many different ways. So me, myself, I've been investing for many, many years. So
Yeah.
I think about my own asset allocation
Yeah.
and I say, okay, currently I want to be X amount in equities, I want to be Y amount in fixed income, and I want
Yeah.
to have global exposure. You decide that. Individuals might decide that themselves. They might decide they want to get that advice from an advisor. But I think once you have that,
Yeah.
then you think about, okay, how do I get to that asset allocation? Right. So now what are the building blocks available?
Okay.
Then you can look at the funds universe to see, okay, if I want to fill that allocation, what is the best fund for me? Now, some people might say, look, I just want to get equity market exposure. I don't really care about anything else for this part of my equity part of the allocation. I just want the market because I'm really bullish on the market. They just buy index funds.
Yeah.
Some people might say, well, I don't know how the market's going to perform. I really think there's a lot of potential, ups and downs in the stocks themselves. I want to go with someone that will actually understand that and try and beat the market with some views. And then you go for an active fund, and then you can choose whether you want to look at someone that's looking at specific sectors, the stocks, etc. So I think those are the kind of, let's say, high-level decisions that you can make. So once you make the asset allocation, you say, okay, what are the different asset classes I want to be in? What styles do I want to take? And then what's the most efficient way for me to get there? For some people, it can be quicker. So they might say, hey, I like trading, so I want to be in and out very quickly. I want intraday ability to move, so maybe they choose ETFs.
Yeah.
Some people say, hey, I'm going to just sit on it, sit on it for the next 6 months. So me personally, I do that. So I do a bit of ETFs, but I probably don't change it for 6 months once I've actually allocated.
Okay.
But that's individual preference. People can choose to do that. So then you look at what funds or what structures offer you something that fits with how you think about investing.
Understand.
And some people can completely outsource it. They just say, well, I'll go with an advisor. They can tell me what to do, and I'll just allocate the money, and then they'll manage it for me. So there's many ways to do it, but regardless of the how individuals do it, the what is really important. The what is asset allocation. Think about it as asset allocation, and think about the building blocks that get you to that asset allocation.
Yeah. So in this entire filtering process and figuring out the right fund for yourself, one thing that investors look at is the expense ratio. And I know that you guys have, some of the lowest expense ratios across funds. So I want to understand, and especially because you is really, kind of popular for penetrating markets really well. What's the play here? How do you plan on beating your competitors when it comes to penetrating the market? And they've already established themselves, especially when it comes to the FlexiCap fund. So what's the strategy there?
Yeah, so there's two, if you are okay with it, there's two separate questions there, right?
Yeah.
So first is on the expense ratio themselves,
Yeah.
right? And I think, expenses matter, firstly.
Very true.
We all know that. We all buy
Yeah.
things and we care about how much they cost.
Yeah.
And especially in investing, these expenses also compound. So
Very true.
the longer you stay invested, that expense builds on the expense, builds on the expense. So the compounding impact of that is
Very true.
potentially very significant. So
Yeah.
people are aware of that, need to be aware of that. So it does matter. So for us, when we are manufacturing funds, we are saying, okay, how efficient are we? And I talked a little bit about this before. So,
Yeah.
we have the technology, we have Aladdin. How does that help us manufacture the funds more efficiently? In which case it kind of reduces our own expenses, and then how can we pass on those savings to the customers? That's how we think about the expense ratios when we're setting them. The second part is different, which is the competitive landscape.
Yeah.
And the way we are thinking about that is actually, it's not about market share of the existing market, right?
Okay.
So because as I said, the market is now just over 75 trillion rupees. But there's 50 AMCs already.
Yeah.
It's really about the growth from here on. And I think with the the kind of tailwinds that I talked about from a macro and a micro perspective, this could easily be 2 to 3x in the next 5 to 7 years. So that's what we're looking at is how does this market grow? How do we help with the growth of this market? And then we are capturing a share of the new flow, right? And so from a competitive landscape perspective, we're looking at the bigger picture, 5 years down the line.
Yeah. So I think we've spoken about the markets quite a bit and about the venture too. Now I want to talk about you
Okay.
and a little bit about personal finance. So you've mentioned asset allocation, I think over 50 times at this point.
So it's important.
Yeah, it's very important. So now let's talk about yours.
Okay.
I would really appreciate if you could give us a view of your asset allocation in percentages if you have that.
Like I said, I only look at it every 6 months, and it's been a few months since I looked at it last. No, but look, I think for me, where I am in my, let's say, stage of life, I'm still more heavily tilted towards equities for my personal allocation.
Yeah.
I have only just moved here recently, so I still have, let's say, a bigger allocation in global equities than, but that's again, it's all personal situation. Like every individual is going to be different, right?
Very
So.
true.
And within that, I have a mix of index funds as well as active funds. So again, for me, it's always about active and passive, not one or the other.
Yeah.
Because again, I think there are segments of the markets where, for example, if I'm looking at US equities, I'm very happy to just buy an index fund or an ETF at single-digit basis points of cost, because you also need to look at cost.
Yeah.
And then for, let's say, more interesting segments of the market where there's potential to outperform, then you then allocate towards an active manager. So for me, more tilted towards equity. I still have a fixed income allocation. I think that's equally important. I think it's really, really important for everyone to look at that. Commodities are very important. So that's kind of where I'm at. I didn't give you the percentage because I don't know off the top of my head. I'm probably more on 70 to 75% equity tilted right now.
Yeah.
If I remember that correctly from my last, let's say, revisit to the allocation. And the rest of it is a mix of fixed income and commodities. But these are all global for me, just because of where kind of I've come from and where, let's say, the portfolio actually sits. But hey, I think it is going to be different for everyone.
Since you've given me such candid response, I'm hoping that you're going to be candid about the next one too. And we call it the Net Worth Show. So we must speak about net worth.
Okay.
Can you talk about your net worth today and tell us what it is?
No, because I don't know. Look, seriously, I really don't look at that in that much detail. Look, for me, it's much more than that. It's going to sound very cheesy, very corny. My net worth right now is my family, my wife, 3 kids. Is that good enough?
Yeah, I think that's a very sweet response. Yeah, it makes sense too. So like you said that, a lot of your equity is actually global, right? And it makes sense. But I was wondering, since you've worked overseas for so long, are there any opportunities that you see there that aren't present in India right now, but if it was to happen here, it'd be a gold mine of, opportunities? Is there anything that India needs to build to compete with global countries?
There's always more to do.
Yeah.
Right. So I think I'll take a simple example. I talked about digital and technology. I think in the space of AI, there's a lot more scope here.
Yeah.
It's huge, and and we have seen a lot of that start to happen now. And when you look at countries like the US, they're in a much more advanced stage.
Yeah.
So that would be one area where I think there is a lot of scope. Even things like sustainability. There's a big focus here now in India to start thinking about that.
Very true.
Countries in Europe are much more further down the journey on that front.
Yeah.
So there's always, look, it's a big world. Many people have been doing different things for a long time. So I would say these 2 areas are definitely areas where there is going to be a lot more done over the next few years.
Understood. And for this next question, you are not Sid anymore.
Okay.
Your name's Aman, and you're 24 years old.
Okay.
And you got a bonus, and you have 1 lakh rupees to invest in the market.
Okay.
What are you going to do with that money? Where do you think you're going to invest, and what would your process look like?
Well, there's this really amazing FlexiCap fund that's just going through its NFO right now. I just put everything in there. No, I think, look, firstly, if I'm 24 and I just won, I don't know, got a lakh of rupees, I probably want to go on a holiday, spend a little bit, go somewhere, go travel, see some new cities.
So you'd invest in fun then?
Yeah, you gotta invest in yourself. I really believe in experiences.
Yeah.
So Yeah, I would probably spend at least half of it experiencing something new.
Yeah.
And then maybe the other half I would invest again in line with mass allocation. I'll be boring on that one, but I would do something fun with half of it.
Understood. Just one last question then. What's that one myth about the markets
Okay.
that you think Indians are still struggling with, but your experience has taught you otherwise?
Yeah, very good question. I think it is the saver to investor mindset, right? And I think that is always the biggest step. It actually was for me as well. I'll admit it here. As a finance professional,
Yeah.
I probably saved for too long at the beginning,
Oh.
right? And I'm there managing portfolios, but I'm not actively trading. I was like, oh, let me build up, let me save up some money before I
Yeah.
start investing. But actually, if you're just consistently invested, like in an SIP, it would have been a much better outcome for me, for sure, right?
Yeah.
So I think that is the biggest first step that people
Yeah.
have to take.
Yeah.
And I think in India, that is still like you can see a lot more people doing it now. So the trends are very positive.
Yeah.
But there is still a lot more in savings that needs to move towards investment. So that would be the biggest, I think, fact that I would point to.
Yeah. So basically, you need to start early. Thank you.
You need to start
yeah.
early, stay consistent.
Start early and stay consistent. Thank you so much, Sid. That was a wonderful conversation. I think one thing I've definitely realized is that asset allocation is the most important thing that I'm going to learn from this podcast.
There you go. The message is delivered. Thank you so much.
Thank you so much for this
me.
conversation. And you too, I hope that you liked this conversation. What was your biggest takeaway? Let me know in the comments. Now, I'll see you next week for another episode of The Net Worth Show. Take care until then.
Investment in the securities market is subject to market risks. Read all the related documents carefully before investing.